we're joined by Rakesh Sharma, who's the ED at Bajaj Auto. Rakesh, thanks as always for speaking to NDTV Profit. Pleasure speaking to you personally after so many years. But let's talk about the numbers. I think what a lot of people are focusing in on is the fact that you've managed to keep your margins more or less intact. In fact, you've improved by 10 basis points and it stands at above 20%, and that has been consistent. Talk to us about how you've managed that one, and talk about the domestic market as it stands right now.
Yeah, good morning. Indeed, this is the fifth successive quarter where Bajaj Auto has delivered EBITDA percentage margin of more than 20%. And as we've been doing in the past, it's the practice of very judicious pricing management, and of course helped by the slight softening of the rupee, which has occurred in quarter three. And that, from our point of view, was very fortuitous because it has occurred at a time when the exports have surged by 27% last quarter. And after almost 9 quarters, we clocked more than 500,000 units of exports and almost $500 million worth of exports in quarter three itself. Of course, there were mitigating factors like the little bit of the mix because of the rise of Africa. The two-wheeler and three-wheeler electric business has now expanded to almost 22%. But the good thing which has happened particularly in the electric two-wheelers is that with the launch of the 3.5 series in December, we have gone from the red zone to the green zone in terms of profitability. We are now above EBITDA break-even, even in two-wheelers. Three-wheelers, of course, electric three-wheelers enjoyed very healthy margins. So, and with the backdrop of relatively stable commodity costs, all that is what went into managing the 20.2% EBITDA margin.
Good morning, Mr. Sharma, and thank you so much for joining in today. It's Puneet this side. I just wanted to ask you about the 125cc segment. Now, as a whole, you've been very bullish on this space, more than, of course, the 100cc space as a whole. I just wanted to take forward your comment because, you said that 100cc, the 125cc space has been growing at double the pace of 100cc. That's one. I just want to reconfirm if that's still the case. And I wanted to just understand about the market, because we see that roughly 30 to 40% of 125cc is towards the traditional commuter bikes, while the rest, including yourself, have introduced the Pulsar and other competitors have had the most sportier bikes. So just wanted to understand how you see the market growth going forward. Will it be in the new sportier versions, or do you see it in the more traditional space to continue having roughly 30 to 40%? Because both segments have been growing at a steady pace.
Well, the construct of the motorcycle growth, first of all, the construct of the structure is almost 50% 100cc and 50% 125 plus cc, not just 125cc. So it's from 125 to 500. And if you see over the last 5 years, there has been a shift in favor of 125cc plus segment. So that segment has now become larger than the bottom half. And that trend is persisted and it is continuing. We are observing that even in the last quarter, that the 125cc plus segment is growing at almost twice the rate of the 100cc segment. That is the segment which is of our strategic focus, because we believe that is where, number one, the margin opportunity is much larger. Number two, we find that it is easier to differentiate. There are more degrees of freedom to a company like us to differentiate our products and draw the customer in towards better styling, performance, etc. Those degrees of freedom are rather limited when you look at 100cc, because the customer has a singular focus. So because of these two reasons, the 125cc plus segment is where we have a very strong strategic focus. We are currently number 2 over there, and on the back of innovation, meaningful innovation for both the commuter-oriented customer as well as the performance-oriented customer. Both have to be tackled in the 125cc plus segment, and both are in our target. Though traditionally, Bajaj, thanks to the franchise of Pulsar, enjoys an image and equity of being more performance oriented. But we have extended the brand to include offerings which also engage with the more commuter oriented customer. For example, things like offering single seat versions. Usually the performance oriented bikes come with split seats, etc., which are more sporty looking. The single seat, for example, allows.
Sorry to interrupt, Mr. Sharma. Just one question quickly on exports as well, because we've seen Africa come back in this particular quarter compared to the last one. It's been almost of 100% growth. If I'm, please correct me if I'm wrong, but it's been a very strong quarter for Africa in terms of the revival. While Latin America has anyway been doing well with your focus over the last 3 to 4 quarters, I just want to understand the scope of both these markets, because while there are some uncertainties in terms of currency for Nigeria as well as Africa as a whole, do you see in FY26 being the export segment that will drive the growth once Africa, and hoping that it does better, but your Latin America growth also continues? Because you did mention that Latin America could be double the volume of something which you do in Africa, which is anyway a very high number. So just wanted to understand your understanding on export in FY26. Could it be much faster than, of course, the FY25 numbers, but it could challenge the growth rates of the domestic market as well?
Well, there is no point comparing domestic and exports. Each business has to be managed on its own merits with its own challenges and opportunities. Having said that, Latin America today is the single largest region in the emerging market for the motorcycle industry in volume terms. It is almost twice that of Africa in terms of the size. Even if I take pre-COVID times of Africa, and put that number, Latin America now far exceeds that. In value terms, it is almost 3 times, because you end up selling better end product over there. We've got a very good position in almost all the key markets of Latin America, which are Mexico, Central American countries, Colombia, and now of late in Brazil, then Peru and Argentina. These constitute the main markets, and Bajaj Auto has got a rich history over there, good brand recognition, etc. So that, as you're rightly saying, hopefully should continue to drive the exports. The recovery of Africa is good. It has finally got into a year-on-year growth in the quarter. It is not 100%. I think there's some mix-up in figures over there, but it has just gone from negative to positive.
Rakesh, Rakesh, apologies. I'm running out of time on this conversation, but I do want to get your opinion very quickly. So you mentioned that you've maintained that margin trajectory and you've maintained it above 20% for 5 quarters in a row. Based on everything that you've said, it seems like that is going to be achievable heading into the 4th quarter as well as into FY26 if exports remain strong and if your mix in the domestic market remains the way it is and improves along the trajectory that you've already spoken about. One would assume that that margin trajectory holds, or will it improve even further?
Hopefully it should hold, because as I said, exports is growing. And there is a gentle devaluation of the Indian rupee, which will always improve the realizations. I also said that our electric business has made a substantive swing in terms of its margin profile. So through a combination, and with the at least near-term outlook on the commodity baskets, there are some pluses and minuses. These are cancelling each other out, and the cost outlook looks steady. So yes, we are optimistic about the margin outlook.
Fantastic. Thanks so much for joining us and giving us the perspective you did, Rakesh. Always a pleasure speaking with you.